I think, one way of looking at it, as you just said, is it was a miserable March. Another way of looking at it, actually, in the last couple of weeks or so, or even less than that, we're up around 15% from the lows. And so in that context, actually, the fact that markets are sort of retreating again isn't a big surprise. And if you go back to sort of post-Lehman days and the global financial crisis, you had similar rallies, big rallies, 15 to 20%, a couple of them, followed by renewed declines. And actually following those rallies, you had the market actually hitting new lows. So the fact that markets are retreating again, I don't think is a big surprise.
Rupert, you also make the point, as you've been raking over history to compare market crashes, that what you've seen in the past is that a bear market typically lasts for more than a month. Now, at this point, we have no idea how long the infection persists for. There's much talk about a second or a third wave of infections that may trigger lockdowns. So what do you make of the extent of any protracted stretch that we could see in this type of bear market?
Well, that's the big question, as you say, is how long the downturn in activity continues, which is why we're sort of still fairly cautious, just because there's still so much uncertainty about when the lockdowns will ease and when activity will start to bounce back. And very much the assumption, I think, still at the moment is that activity does slowly start to recover in the second half of the year. If that doesn't happen, and if we get signs, as you say, that we do get a sort of secondary spike in infections in countries such as China, then I think you're definitely looking at sort of renewed decline. But having said that, as has already been pointed out earlier in the programme, in Europe at least, there are some tentative encouraging signs that infection rates are starting to slow a bit.
Some market participants have wondered whether investor sentiment could also be roiled by more data, and we've got some ADP numbers coming out later today. Nomura's been pointing out that the ADP numbers, the private sector reading, could be more interesting this time round than the non-farm payrolls because they give us a sense of what took place in the second half of March, the extent of the layoffs. What are you expecting from that private payroll report later on today?
I'm definitely going to have either in terms of the private numbers or the payroll numbers on Friday, you're probably looking at 100 and 150,000 declines. But I think in a way this is, everyone knows there's going to be a big decline in employment. These are just the very first numbers. Last week you had initial jobless claims hit record highs. So in a way I think you shouldn't get too carried away with sort of the exact number this month. It's more the damage which is going to be done in the next month or two. With some people talking about unemployment getting up to around 10% in the States, from sort of under 4% at the moment.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.